Okay, this is the fifth video. Wait for a minute, please. Okay, this is our this is our five video, and here we are going to study or learn price structure. Mm, in this video, this is the one of the most important thing about trading in general. So this is the the principal. This is the main. This is the main. Okay. So the first that we are going to do now is trying to something that everyone is missing when the people begin to make trading. The people use indicators, systems, whatever, but they always forget something. They forget the price, and the price is the most important. The price structure is going to give you everything you need in Forex. Even if you don't want, you can only trade with price structure and no use any indicator, any system, earning nothing, only with the price. Okay. Only with the price. Okay. This is something that we usually forget. We need to learn that we are working with, in this case, uh, money, and we're not working with candles or chart. This is important indicator, everything, but we are working with the prices. So we need to follow the price structure, and it will give you everything. Okay, first, one of the most secret in Forex is that, okay, sorry, okay, that's it. Okay, one of the most is that people in Forex, exactly Forex, work so fast. Okay, we need to understand some basic thing. This market is accelerated. That's going with all the kind of market. This is like we're working in accelerated market. Let's going to see some difference. Let's going to see. So this want to say that price is going to be fast. So for that reason, we need to work on higher time frames. Because small ones will give you anything, or noise market. Okay, so let's going to see first an example about price. Let's going to see this chart from Forex. This is H4. Let's going to looking for some another market that is not Forex. Look, we can see that the price is moving a lot of oscillation, and we are going a little time frame. It's going to be worse, worse, worse. But if we look to higher time frame, you can see the swing, the real trends. So the people, if you're working in H4, H1, are crazy. If you were in this little stress time frame, you are going to see or watch nothing, nothing, anything, whatever, go down, go up, no structure, no, it could be structure, but it's too fast. It's like we're trying to watch Formula One cars very fast, and everything could change in low time frames. Okay, so the first, we need to understand that. So we need to work with smaller one. Let's going to see another example from another market. This is an S&P. Let's going to see the difference from S&P. Look, all this kind of market. Let's going to see, for example, this market is very slow, even in lower time frame, it's very slow, no too much noise. So that's the big difference. First, we need to understand that we are in an accelerator market, and we need to reduce speed. Okay. So I'm going to explain after this. This is the price structure. Okay. So we need to work on higher time frame to reduce noise market. Okay. Second, okay, price structure. In this price structure, we need to understand that the market move into direction. We have two forces fighting themselves. So we have first our bullish or buyers. Second, we have bearish or sellers. So the main idea is to go with the stronger force. Okay, so in other words, this is trend with the trend. So you can trade against the trend, there's no problem, but from the best part is when the trend is your friend. Okay, let that be your friend. It's going to be very easy, and you're really going to have a real difference. So we need to understand that we always are going to try or go with the winners or with the stronger player here. Okay, always go with the best players, stronger force. At the end, they are going to be the winners. Okay, that's the reason that we should always try to make some analysis and go with the real trades or trader or the sentiment market. But let's go to explain this. The first is that we're going to do is to we understand that we're first. We need to work on higher time frame to reduce noise market for Forex. Second, we need to go with the stronger force. Always go with the stronger force. They're going to be the winner, and you will be the winner too. Okay, and third, let's going to study the right price structure. I'm going to remove this. Okay, in the price structure, we have something. Let's going to remember this. We have a bullish or an uptrend. When you have a bull, okay, the market is going higher, low, higher. We are in uptrend. In this case, the bulls or bears are winning. So the market sentiment is bullish. Okay. Also, in the different way, you have the bearish structure. When the market is going low, lower, and high, lower. This is, you can see, a bearish. Okay, everyone knows that. So the thing here is that we need to study the price structure. This is everything for trading. Before to take a decision, first study the price structure, and I will teach my method. So we need to follow the price. We always forget follow the price. Is all that you need to do. If you want to be a winner here, just follow the price, and everything else will help you too much. But the most important here is following the price. So if we want to follow in the price, we need to, let's go into an example. In our uptrend, we have high, higher, low, lower, high, higher. Okay, you know that. So in this case, here we have a support. After, with this higher, we create a resistance. Okay, so the market continue this cycle, higher, low, lower. Okay, you understand the dynamic now. Until, in this case, we are going to be bullish. So it's going to happen something in any time. At the moment, this trend is not going to be always bullish or always bullish. Sometimes the market will change. So at this time, the market, sometimes the market fails, and it could make a higher, and it could happen something like this. And he began a different. This is not higher. He failed, you know that, and he begins to make low, lower. So at this point, the market could begin to create, try to change the direction, but it's not confirmed, not yet. Okay. So in this time, when the market has made that move, we're in our uptrend. Okay, we continue the uptrend. Our last support here, our last resistance here, and suddenly he couldn't and fails and try to make a new high higher, and we need to have an alert. When this happens, we are going to create, or we're going to watch our key levels or our special points. So we create a range. I'm going to write here. This our resistance, support. At this time, the price fails to make a new higher, but the price hasn't broken yet the trend. You see, the trend is still bullish, this trend line. If we want that price change the direction, we need to respect this resistance. We need to break the trend line and broke the support. And when he make this, he break the trend line, the support. It's possible that he's changing this direction, or he broke all the bullish structure. when he blows trend line and support. But if the price makes something like this, broke the trend line, but he doesn't break the support, he could continue making the bullish trend. Okay, and we just obtain the trend line from this angle. This is very important. We need confirmation, trend line, and the last support for an uptrend. This is the most common error in Forex when people don't respect the price structure. Okay, so this is very important. But we have something here. When the price is going to continue the example with the price broke the resistance and he broke the support, at this moment we're going to have this. That's going to change the color. This. Just in this moment, this is the momentum. Okay. When the for first time all the bullish structure has been broken, but we cannot enter with momentum. In Forex, this doesn't work. In Forex, never enter with momentum. If you anytime you study Elliott wave, they call correction A, or another kind of well, on price action is called price momentum when everything has been broken, and Elliott wave is the correction A. And okay, it depends from the way you want to see, but it's the same thing. Okay, in market maker it calls manipulation, whatever. It's the same thing. You put your name, whatever name, but let's call it momentum. When you have this momentum in Forex, we have a secret moment, and it's when we never enter here, never. We need to wait a pullback to enter to the new trend. So in this time, when the structure has been broken, we need to wait for a best moment. If we are going to sell because the bullish structure has been broken and the market could shift to another way, we need to wait for a pullback. In 98% from times, it made a pullback with the trend, and we've made a Fibonacci from here, from this momentum. If we made a Fibonacci from here to here, this pullback is going to size in always like a 90% in 88.1 Fibonacci retracement in Forex. This is a secret or the best time to enter in a downtrend. Usually, the people can continue, make his move into the new direction. And you enter in when the price structure is broken. So the best important here thing is try to detect this momentum for take decision, because the momentum is going to give you when the market is a signal that the market, that all this has been broken and suddenly it could change their direction. Fibonacci will help to size. All the other things are going to help, but we need to understand this. The momentum is most important. Okay. Which is important also, these levels, this resistance and support. They will give you a range where the market is moving after momentum is making until he made the big movement on short direction. He made a market shift. This also, when the market shift direction, the market is going one direction, he makes a momentum and he continue the other direction. This is a market shift. Okay, from bullish to bearish exchange. Okay, this is the basic for price structure. So, okay, from his price structure, following the price. Be careful. Take care. Special support or resistance at this point. Find the momentum. And we will have something here, price structure. From bearish is the same, just change the example in different way, but it's just the same. If we understand this concept, you are going to have a lot of probability to win in Forex. Now I will explain why. This is part of the concept. Now we're going to the practical, where we are here at this moment. It's going to change. Another pair, okay. So now recalculating this, we need to work in higher time frame to reduce noise market. This is for Forex. We need to go with the stronger force. We need to be with bullish or bearish. Okay, I will explain this more. And we need to follow the price structure. The price structure we need. Follow the price. Find the momentum. And take care about special support and resistance, the range. Okay, this is the theory. Now let's go to practice. Let's go to the method and practice. Now the interesting is coming here. Okay, now we understand the theory. Let's go into main and how it works. This. Okay, the first that we're going to do, never, this is a very important, never make analysis in Forex, at least the daily or weekly chart. Never make analysis in H4, H1, M30. Okay, you got it. I think you got the point. Never M15, M5, M1, never. In Forex, never, forget it. Forget it. So the analysis, we only are going to begin with daily, weekly, or even I really like monthly chart. Okay, never in lower time frames, never in Forex. Lower time frames, no. Okay, so let's go into change this example. This is Euro-Yen. We're going to begin. So we are here with the first that I personally do. I go for monthly. I begin all my analysis in monthly. In this case, the first that I'm going to make is to watch what is the part has been doing in all his history. And this is too easy. Okay, let's go into draw. I recommend that you can use any tool like here to have a clearly idea about it. So we can begin. The price begin to make this structure. Okay, so this was this as the last support. Okay, let's going to follow the price. Just follow the price and try to market the special points. Okay, now we have the here. This is the last support from this bullish trend. I'm talking monthly. This is 2003. Okay, more than 80 years. But I just want that you understand the concept. And when you're going to make your trade, you're not trade, you're going to find out that this is very helpful. We continue drawing. This candle, like you see, this is momentum for month, a lot of month to create this candle. The price changed that direction. He broke the trend line and he broke the support. Okay, let's go and continue the price. I'm going to raise this support. Okay, but we know that this is a key support. Oh, we continue a downtrend. Some people can tell me, oh, the price has been broken. The trend line, it happened the same. We have here this finish moment, okay, and the price continue to the upside. If we're going towards it here again, you can see like the price change from one direction to another direction, from one direction to another. But like we're watching in bigger high game, and we have all this previous information from 2002. Just going to make it easy. Okay, continue. So the people can ask me here, okay, this is an uptrend, or this is a we're in an uptrend, or we are in a downtrend. This is the really some people can be fusing here. But if we are watching this, we are in a bearish trend. Why we are on a bearish trend? From all the history from this pair, because the only way that we enter again in an uptrend is when the price across this again. So for other reason, the price has been just moving in this uptrend. It's just like if we make it some silly chart, just like this, the price is just going in an uptrend. So he need to break this support, need to break this, need to break the resistance, and to think that we can change direction or shift market. But from all these years, 2008, when the price broke this initial structure, he continued from down this. And when the only way when he reached this level, look what happened. The price goes down. So the only information that we want here is that the price has been falling since 2008. Okay? But been falling and falling. Some people can confuse that it could be a bullish trend, but it's not. It's a just retracement from this one. The only thing that we need to begin, that we are going to only search or understand that we are in a sell sentiment, okay? But not for nothing more. It's not going to trade, it's not going to take a decision, it's not going to nothing, just to understand what we're in adult. So let's go to our trade journal. This is mine. So let's go into my example. Okay. Let's put euro. Okay. Okay, have in the monthly, in all the history from this pair, we have been in a sell or a bearish sentiment. Okay, this is the only that I see. I'm not trading for this. No, just telling from all the history. This money, this pair has been going down in all the history. All this kind of thing, some people can interpret that the price has been is reaching, but the price is not going to be higher, or not going to, when he is not going to break this structure, unless he broke this support and he broke this resistance. So the truth is that euro have been going down all the history. This only could be correction from the price. After monthly, we're going to weekly. And weekly, we don't need, we need to put your zoom out from the screen. And let's go what is going happening in this case from the euro. Okay, it's going to draw. From now, we are going slowly time frames. Okay, let's go to see what happened here. Where you can take it. Okay, now we have resistance. This is information that we have from a long time ago. At this time, let's go to an example. We have our uptrend. Like you see, from this point and this point, we have an uptrend that's projected. Look how it works. And we have high higher, low lower, high higher, low lower. And we have a special point here. The last point that touch the resistance. This is a very important point, the support. Sorry, the last support that touched the trend line. This is very important to identify. Okay. After this, we have a resistance, the last support from the trend line, and look what happened. Suddenly, the price coming down and broke. This is the momentum trading, all the momentum. The price tried to pull him back, and now we continue in a downtrend. How do I know that we continue the downtrend and all this that the price is moving is not uptrend or the change direction? Because the only that the market shift or change direction is when this point, I'm going to remove, okay, is this point, this is the low lower, okay, the low higher, sorry, is that this change, this in this time the market change direction. But if the market is below from this last resistance, the market continue downtrend. This could confuse some people. No, but the market is setting up. No, the market is just trying to pulling back in a downtrend. The downtrend is here and it's just pulling back. But the only way that the market shift and change direction is when he breaks this point. Okay? So don't confuse with 10. Usually all the 80 or 90% from traders confuse that think that this is an uptrend. This is correction. Later we have some technical pattern and this is a correction as well. But we understand that from the weekly also we are in an uptrend. So even the price even could reach this level here, and with the price level here, and suddenly he made this. And he just made a double bottom and he continues his downtrend. He never changed direction, market shift. Okay? Or more possible that this part is doing something like this. It's going up, down, down, and he's continuing down, 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 down. Okay. So understand the price structure from weekly. We are in a downtrend or sell sentiment or bearish sentiment. So our journal weekly sell. Okay, now let's go to make price structure for daily. We are not trading, we are not doing nothing. This is our journal for half information in daily chart. Okay, now let's go into daily. And the best of this thing is that you made it, and after you made it, you can save this information, and that's it. You don't need to stay for long time here, making every day. You do it once, and this will work. Only the H4 and daily will be changing, but all this weekly, monthly, they keep for a long time. So you can um, check this 1, 2, or 3 day only for H4 and daily, or once weekly, but no more. So continue. Now we're going on daily. And daily, let's go and see what happened from daily. Now we have from the last year begin. What has been happening daily? We're going to have a more clearly a view from the market is doing from the last year now. Continue. This is the same movement that we made before. Now we have more information with more candles. Okay. We had from the last year an uptrend here. The market have this special point. Was the last time after he created the momentum. Okay. The momentum here. We need to identify. I want to change color to identify better. This is the most important point. The momentum. The momentum is annunciating that the market could change direction, but never enter with momentum, because if you enter with momentum, the market could make double top or whatever, and you will blow out. So never enter with momentum. It's going to give the first signal. Okay, let's continue. At this point, the market tries to came back. Let's see what happened here. Look here, especially the market never. This point, the market never respect this range. Respect. Never cross or never close below this point. Okay, let's continue. The price going here. Price continue falling, falling, falling each time, trying to make low lower, you know. Look, this is a special moment. The people, some people, oh, the market is changing direction. No, this is a pullback. It's continued downtrend. It's a downtrend. The only way is with the price close above this level. From now, we will be in a confirmed bullish. The market shift direction from sell to buy, or from bearish to bullish. But if it doesn't cross here for up, it's not, this is still bearish. So let's have bearish sentiment. Okay. So now, until now, we have this pair. In the monthly, from all the history, we were in a bearish trend from a long time ago. After the weekly, we are in a sell. We are bearish. And daily, we're still bearish. Now, until now, we have the market sentiment or the pair sentiment. We only have this. This is not for trade. This is not for take decision. This is to understand what this pair has been doing from all its history. Now, we are going from the time frame that we're going to begin to work, H4. So if we understand that the market has been on all history going down, it's going down, it's going down from monthly, from weekly, from daily down, why we are going to buy? Let's go to find the best opportunity to sell in when the price they gave this opportunity. So now we need to do something like this. Now we understand that we are in a downtrend. The bias, the market bias direction is this. This is the bias direction. We're in a downtrend. So if we understand that we're in a part that is falling from a long time ago and is falling down, we need to wait this kind of movement, these pullbacks, and go with the trend. Wait for the pullbacks, this kind of pullbacks, and go with the trend. This is the logic. Another example. Let's go into another let's go into the past and let's what I say. If we understand at this point, if we understand in any moment that with is a pullback, let's go with the trend. Let's go with the trend. The opportunities are going to be higher. All this trend is going to be from low. The pullback, the low, the pullback, the low, and always going to be more direction to go down. So now in H4, we understand we need to wait that the price will be rising up. Like this example that I marked before in H4 time frame. Okay, at this time, we understand the market is rising up. This is the best moment from this pair, from every chain, when the price is going up, because you know in some moment the price will correct. Okay. Another example, when the market is going down, if you wish, but this for a more advanced, you can trade all this pullback. Some people like it. I don't really like it because if I understand that I'm trying to find out, you can have like a really like 40 or 50 stop loss or something like that, and you can have a lot of this move. From think it's better to always go with the trend, but you need to identify so well. So the part here is that only go with the trend, only go with the trend. Why trade this pullback? Yes, we can make it, but we need more information, we need more experience, we can trade the pullback as well. But for first, my recommendation is trade the bias direction or market sentiment. Okay, or the market sentiment. Do not trade again until you have a lot of experience and you will have and you will need more info. Okay, so understanding this from this pair, I understand that now the pair is going down, down, down. So let's go into see something that I marked here. First, we need to work on higher time frame to return this market. Okay, we are working from the monthly onto daily and set up the trades on H4. Okay, never this. Second, we need to go with a stronger force, bullish or bearish. In this case, like we wrote on our journal, we are in a bearish trend. Let's go with a bearish. Let's go into sell. Now, we have something here, H4. The market has been falling down, falling down. The market is respecting his trend. At this point, we can make some basic analysis. This is a pullback from Eugene, and we can make some kind of candles. Okay, we can. I really like to make this on the daily. It's going to be more easily. At this point, we have this bearish channel. You can reproduce here. At this point, more points target, and now we are in a pullback in a downtrend. So the more possible is the price in any moment try to produce this little pullback, going back, and we're going with the trend. But we cannot see daily. We are going to watch on H4. With the difference to take the trend lines on daily, because look, this is a spike. You always take the body of the candle, never take the spike. Okay? And all the most points told you, never do that. Why not? Because in H4 it's going to give another information. It looks like it broke the trend. but never do. This only was a SPY from D1. So this is the best time frame. Okay, let's go to H4. Now we are in an uptrend. So we have two options here. The only way that I could enter from this pair, if I want to go with a trend, I will just follow the price. This is everything we need to do, follow the price. We need to work in high time frame for the next market, and yeah, and we need to go a stronger force. Okay, we're going to beat this force. Let's go into process total is follow the price. This is the first. Follow the price. At this moment, the only way that I could enter or sell, I never could enter sell here. Never. If I found a pattern, I found everything, never. Do not yet. They only save to enter because in little time frame, let's go into the journal. The market is bullish in H4. Okay, is bullish. Why is bullish? Is high higher, low lower, high higher, low lower, high higher. The market is rising up in a downtrend. So this is a pullback. This is not the best way to trade. Like you see, that's going to show you why never trade pullback in never in little time frame. No, at all, never. Look this. This is a pullback. This is a trade. Okay. This is a pullback. This is the trade. Look the side from the pullback. Look the side from the trade. So the most is that the part is trying to make it something like this. In this case, but at this moment we cannot trade because the part could make something easily that change direction or making another correction, and we need to understand the trend line. But until the moment, we need to wait, follow the price, follow the price. So at this moment, the thing that we can do is the next. Let's go from the daily chart for H4, and we're going to wait something for this. In this case, we need first that price creates momentum. This is the last support from the trend, this one. So we need that the price creates a momentum that brought me the trend line from this pullback, that brought me this last support, the price pulling back. At this moment, we're going to looking for our entry, but after this confirmation. And you can trade all these. Your stop loss could be here, and your take profit here. Look the difference. Why do not trade yet? Some people like to trade at this point. Why do not do that yet? Because the price will continue making something like this, a really big spike, and after he can continue here and go down, and you're out from the game. Like this case, this example. This is the best example here. The people try, oh, we're in at the trend line, let's go to try bearish. Suddenly the price made a surprise and came back and continued, and you are out. Okay. So we need to wait for momentum. Now, find the momentum, not momentum until now for this pair. Take care, special support and resistance at the range. We need to understand that the market is moving in range and we need a special points. So we can take this special point, resistance point, support point. Obviously, will be, let's go to try in day one. We can have a better view from here. Now we have, this is a special point where the price was falling down and suddenly touched this point and reset. So we have the support. And we are going watching to the past to know the supports. It performs the system from here. support from here in the past, and this is a special point. This is 126. Let's go into price action again. Very close number. So the price came here. This is a special point. Look how he was reacting. It was a support, a resistance. Now he's taking a support this number. Okay. This is when the price came here down. Now we need to understand. We need to continue following the price. We have our support. Now we need to find our resistance. Let's go to draw the price structure. Going up, going down. In this case, we have this support, the resistance. We continue going up, going down. This resistance, going up here, resistance, going up, this resistance, going up, respected double bottom here. Now at this point we have the support. If the price broke the trend line above this point, the market could shift and change direction, at least to make a new correction, okay, or a bigger pullback. But for now, we have this special point, 128,440. It's going to draw it. This is the range that we are working for. Our resistance and our, let's go into close number. I like to drive close number, 128.44. Okay, it's work better for me to understand it better, market. Okay, let's come back. Now that we have this range, the market has been moving from this range, but you know the biggest trend has been going down. So let's go into with the bearish forces. Okay, let's go into draw this in our this resistance level. It was 126. Here, and this is special point, the resistance, 128.40. Okay, now we have a range here. This is our key level. And if you see in the past, this is a special point, let's go to find. In the past, it was taken the support, now with the resistance. And if you're going from daily chart or monthly chart, this was a special point in the past for sure. Example. And if you're going to the past, you will find something like here. There could the past from here. So this is our special points, this range. So now, if we have all this information, now we have the key level support. We know what the market has been moving, or what is the direction from the market. So do not going for buys. Don't go for this pullback with a good strength. So now I'm going to add a MACD. The MACD in this case will help to us to take a best decision. So after to go the MACD, we are going to looking for sell on this pair. This pair is for sell, not buy. This is a good example, and he make a good entry for this week for sure. Eugene. Okay, so what we're waiting for? Okay, it's going to move here. So now we have the market respect this resistance, and we are waiting something like here. that the price broke the resistance, broke the last support. Let's go into draw it. Broke. So we have waiting something like this to go enter from this pair. Now we need to identify the momentum. So we're waiting that the price cross this trend line, broke the support, pulling back, and here we're going to find our entry at this point. I will explain now how. And we are going from here to here. Our stop loss could be below this resistance at this point. So at this example, we can have something like this. For example, like set 76 stop loss, your profit 166, at least 2 at 1 stop loss here from this for here. If we are watching and we hold the position, it's possible that we can going down. Okay. Now, how to enter? We know the momentum, we know the support, we know the trend line, we know the range, the special key level range. But now, how to enter? So very well. Okay. I will explain. Also, before the perfect entry moment, I will explain some. We need to check MACD. MACD is going to give you precious information. Let me add a MACD. This template. I have a special template, but I want to use this clean just to explain the concept. Okay, MACD. We need a special MACD. We cannot work with the same MACD. For you to see the previous video, to understand that I work with higher indicators in lower time frame. This is the best to work in Forex, to fix it, the indicator. Okay, let's go to. Anyway, here we have. Now, let's go into. Okay, we are in H4 time frame. Let's go into looking for daily MACD. Okay. For daily MACD, daily is with 44 periods from daily chart. Divergence, no, here we're not going. We're going to make it manually. Okay, we have the MACD here. So the MACD gives to us a lot of beautiful information. Which information is that? The price has been moving. This is a daily MACD in an H4 time frame. The price has been moving for direction. Cap down point, higher point here. This time we create this divergence. For this time they make this pullback, but the price continue high direction. And this special moment we have convergence here. This is just the regular pullback. The market is not going up. The market will continue the downtrend for sure. And MACD confirms. If the MACD will be different, trying to something like divergence, from this point, you know, this point is up, down, down, convergence. Just the MACD is moving. So now we need, we have the confirmation that everything is going to our plan. The MACD is going down, convergence, and the price is going down, and we are with a sell. So write it. It's just to have more information about the journal. Okay, we have convergence. Okay, this is a good opportunity from this pair. Okay, so now we have our special resistance and support level or range. We understand convergence. The MACD is moving with all this market sentiment from weekly, for daily. So this is a sure for sell every. And in each forum, the entry time frame, the market is going against this all, against the MACD, against the daily, against the weekly, against the monthly. So this is a pullback. Okay, the market is doing everything. If the market going in different direction, like this here, if we have divergence, the pullback is going to be higher. But in this case, it's just a little pullback. So now, let's go to see what happened. And this is the special moment. So now we understand that we need momentum. Let's go to make example. It's going to make example that the market creates this momentum from here to here. It broke this trend line, yes. It broke the support, yes. And at this moment, we need our Fibonacci tool after the momentum is over, and the market is trying to pull in back again. For the example, at this moment is when we are going to use Fibonacci tool from the higher point until the momentum finish, and we can set our order here in 88.1. For this example, if the momentum is to here when the price is coming back, you can put here your order, sorry, I'm moving. You can put here your order in 88.1. Here you can put your order at this, right, this between 88 and so to here from here. But we need the momentum pulling back until this. He told you order, and you're going down. Your stop loss below this point, and you are going down. This is the secret. Let's go to see some example about this, and surely you're going to have a really good profit. Your stop loss will be around 36, 39, and you will be like 163. Easy trade with a trend. Going to erase this here. Now let's going to see a lot of examples. In this case, we're trading with the trend. You can trade the pullbacks, but just take care that you have a good divergence with the higher MACD time frame. Okay, this is, let's go into some example here again. Another chance opportunity from this same pair. Okay, in this case, let's going to see how we can enter from this trade. We have in this case, we have this support, the key support here, resistance, sorry, and the support over here. where the momentum was created from this downturn, because the market was in this range. Sorry, was in this range. The momentum was created. We took our Fibonacci tool from the momentum, 88.1. Here, our entry, our stop loss above the resistance. And we could trade all this. This is one more of the hard part because the market was in range. Let's go to look at another example. To know how to understand momentum and Fibonacci. This is the most beautiful forex. Let's go to look at first on the sample where momentum was created when the price was broken and momentum was created. For every daily, it's more easy to find. Sometimes the price okay, here we have a beautiful sample. This is just that the momentum works. The price was, we were in a downtrend, falling, okay, falling. Now we have this special point. It was the last support in this downtrend. Price fell down. We're still under here. We're still in a bearish trend. Nothing special. At this time, boom, momentum is created. It broke support. It broke the trend line. So we can take, you know that the market is going to shift when momentum was created. But you cannot enter just by momentum, because look what happened. If you know that when the momentum is created, you enter here, red, fail. So you need to identify the momentum here. It's going to put another color for momentum. Here to here. From this momentum now, we have a special point, and we are going to put our Fibonacci to the momentum and read about 80.1. Let's go to see what happened. And this is our zone from the market buy. A little bigger to have a more clearly. This is the rally. Okay. The entry zone 79, 88.1. This is the zone. This is the killer zone. Look what happened. The price, this is the momentum. To draw it. This is the momentum that broke resistance, broke support, broke everything, and the price just came back to retail zone 88.1. When the momentum is created, you put Fibonacci, you place your order here, and you set and forget. Look how the price came for your order, and the market continues going. This is an example. I'm not taking care about market sentiment. I'm not taking care about nothing. It's just an example how Fibonacci and momentum works, only for that. But the best part is when you make it with a trend. You're going to be more opportunity to win. So this is the price structure, momentum, and Fibonacci. So with this, you have a lot of things to do with forex. We need to understand good this first. It could take a time. To understand it well. I know it. But when you do it, you will see the difference. Okay, so take it with calm. Now, in the sixth video, I will explain how to combine this with a solid system that I explained in 4 previous video, and how to set for swing trading, set and forget. So you can trade only with this video, but with a system it will make easier and more practical. But just press structure, explain it in this video works. Okay, so take your time to understand it well, and later we go when we put all it together. So we can terminate this info assimilated, working well. We can go to 6th video to put it all together, and you will see how this whole system will work perfect. This is the way to how to beat the market. Okay, that's it.